Hey everyone, Lucid's management team gave Lucid stock investors a lot of insights into what to expect from their spending on research and development, sales, general and administrative expenses, how much cash they've got, and the timeline between now and when they produce the Gravity SUV and the sustainability of the cash, or how long their cash balance will last the company. So I wanted to share those details with you in this video and what these could mean for Lucid stock investors in the medium term.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So on research and development first, the company said that in the first quarter, they spent $284 million on research and development. That was up 17% year over year. And then what they think is that they're going to increase their research and development as they ramp up the new vehicle programs. And the new vehicle programs being the Gravity SUV that's coming out later this year, or that is scheduled to come out later this year. And then a lower priced mid-sized vehicle that's planned to come out in 2026. So as I've been saying for a long time, it costs a great deal of money to develop and produce these newer models, and that's what a car company continuously must do. It needs to continue updating, bringing newer cars to market, improving on existing models. Otherwise, the competition is going to do that, and you're going to be left behind. So that's part of the reason why I've advised against investing in the automotive industry. I personally dislike the industry, and this is one of the reasons I dislike, because it requires so much capital, and continuously, every couple of years, you've got to continuously make these upgrades and make these improvements. Otherwise, your competition is going to do that, and you're going to be left behind. So the management team also saying that they expect selling, general, and administrative expenses to increase, primarily due to continued investments in strategic growth initiatives. In other words, they're going to need to spend more on advertising, on promotions, on incentives to generate more sales. Because as you noticed in the last quarter and in the last year, Lucid has now a demand problem. And that's coming from management, not me. They've signaled to investors that, look, if we had more buyers, we could produce many, many more units. But we don't have enough demand for those units. So we're not going to produce cars that don't have buyers, which is a prudent decision. I agree with that decision. You don't want to build these expensive cars and have them sit around in inventory, and you've got to pay for storage. You've got to pay to maintain those cars. You've got to protect them. You've got to hire security and added costs of storage, right? So you don't want to produce more than you've got demand for. So now that Lucid has more production than it has demand, it wants to advertise, it wants to promote so that it can bring demand up to where it has the production capacity to do so and match production with demand. Remember, Lucid is built to be a much larger company. It has grand ambitions. At current scale, right, it's planning to produce just 9,000 units this year. That's not where it wants to be. That's not where it's built to be. It has the capacity, the wherewithal to deliver many more units, and it needs to, frankly, in order to be profitable on the bottom line. It's not likely to ever achieve profitability producing 10,000 units. That's not going to be the case. It needs to get up. It's hard to say how many. Lucid hasn't told us how many units they need to sell in order to be profitable on the bottom line. If you compare it with, let's say, Rivian, which is now, last year they produced 60,000 units, roughly 57,000 to be precise, and they still lost billions of dollars on the bottom line. So if you compare that with Lucid and say, okay, they need to produce somewhere around that range, or maybe double that, 100,000 units to be profitable on the bottom line, remains to be seen, but definitely not anywhere near 10,000 units. So the company's saying that they ended the quarter with approximately $4.6 billion in cash and cash equivalents and investments. Now, Lucid has been fortunate to have the PIF, the Saudi Arabian government, essentially the investment arm of the Saudi Arabian government, supporting Lucid. They've not only invested billions of dollars in Lucid, but they've also agreed to buy thousands of Lucid's cars. Now, Lucid, without the support of the government, of the Saudi Arabian government, I don't know if it would still be around at this point because it's losing so much money and it really needs those injections of billions of dollars from investors. Doesn't have to be that investor, but it needs money from investors to survive until it gets itself to the point where it can be self-sustaining. Now, they say that that gives them enough money, the 4.6 billion, plus they have a little bit more borrowing capacity. This is enough to get them to the start of production for the Gravity SUV and into the second quarter of 2025. So roughly this time next year. So they've got roughly a year, maybe a year and 3 months until they're going to need more capital. That's how quickly this company is going through money. And it's not just Lucid. Other EV companies not named Tesla are going through hundreds of millions, if not billions of dollars in capital, trying to increase production capacity, increase sales enough so that they can be self-sustaining. And you've got to reach large levels of scale in the car industry in order to be profitable, because one manufacturing facility costs so much to build and to maintain that you need to deliver and sell thousands, tens of thousands of units, maybe hundreds of thousands, just so that you can break even. That's just the characteristics of the industry. That's why, again, I'll remind you, it's not an attractive industry for investment because of those large capital costs. And then to make matters worse, you're dealing with dozens and dozens of competitors in that industry, right? There's dozens and dozens of car companies around the world that are all investing billions of dollars trying to capture market share in this highly competitive industry. So they're scheduled to start up production of the Gravity SUV program in late 2024 and the high volume mid-sized platform in late 2026. Of these two, I'm most hopeful for the Gravity SUV. Demand for SUVs is stronger than demand for sedans, and you've seen evidence of that. Tesla's had great success with its SUVs. Rivian is having some success with its SUV. Some of the Chinese companies, the Chinese competitors over in that market, I know it's not the US market, but even in China, demand for SUVs exceeds that of sedans. So I'm most hopeful of the SUV coming out later this year, $80,000 price point. It's a little pricey, but that's around where Rivian sells its SUVs, and it's selling, like I mentioned, 57,000 total units last year. A fraction of those were the SUV. And so there is some demand in that market. Lower sized, high volume, mid-sized platform in late 2026. We'll see how much traction that model gets. That's a long time away from now. I think investors in Lucid should focus on the Gravity SUV. Hopefully the company is on schedule, launches this platform, and then starts ramping up production in 2025 to at least help reduce some of these losses and give it a longer runway until the battery technology improves, until the charging infrastructure improves, and people are more interested in purchasing electric vehicles. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.